Hi, this is Dave Aquino with MicroQuant, and this is the free video for Wednesday, June 24th, 2015. Wow, I want to show you Netflix today because we were trading Netflix a good amount because of the amount of price movement in the individual stocks at the open. Now, there have been rumors that Carl Icahn was selling some shares, moving those profits from Netflix over to Apple. Apple is up 2% today. So we're trading Netflix back and forth on a smaller time frame. But I've zoomed in here to a higher tick frame, mainly because to show you some of the reactions of the market. Now, what happened was we broke higher, we'd keep breaking higher highs, we'd make little pullbacks. I was consistently making some money going higher and lower on small positions in Netflix. And at one point, right here at 706.26, I believe Netflix was up almost $26 on the day. Now, we look at this, and if I show you a 75 tick time frame is what we were trading at the time. You can see how big a move occurred, right? So right here, I actually had 4 contracts of Netflix puts. Here on the double top, the bearish divergence, I added 4 more. Right at that moment, Carl Icahn tweets that he's out of his Netflix stock positions. And from 706 roughly, it fell. And these are tick charts. This happened extremely fast. That before we just saw it fall, we saw it bounce, we saw it drop again. I sold a little bit here because of the divergence on the indicator line. But then when we came back to the neckline, pulled back one more time, we had an inverse head and shoulders. I sold the rest of my position right there. Roughly, this move from 706 down to 688, and then here to 692. Roughly on those 8 contracts, I made a little over $1,000 a piece. Now, that is not anything that I did other than get in because of this double top, this divergence. What happened after that had nothing to do with me. My job was just to manage the position so that we could either stay in case it was going lower or get out at a good time. And that's why we sold a little bit here and a little bit here, and I was happy with my trade. On a personal level, a little agitated that, I happened to be on the right side of the trade when this happened. I had a 50-50 chance. It could have been on the opposite side of the trade, and the opposite happened. So it doesn't seem quite fair from a trader's standpoint that the markets can react to someone's action and therefore that gives them the ability to influence the stock price. I mean, and the outcome of what happens in that stock price. That has nothing to do with general kind of trading bulls and bears stuff. So, but that's just personal opinion on that. But it gives you an idea when something like that happens and you hear this bang go off and everything starts moving. There are ways to just keep sharp. Take a look at your positions, and then I said this in the room, is once you get out, then you stop and you look at your positions. You check any open orders, you check current positions, and then you look at your profit and loss. Okay, because you want to make sure that you're not sitting there counting your money and then now you have an open order sitting out there, and next thing you know, it gets executed, and then the market continues to move. But Netflix eventually, after the inverse head and shoulders, actually comes up to roughly the 618 retracement or the 50% retracement right in this zone. So you could even traded the inverse head and shoulders and caught a $6 move back to the 50% retracement. So always an opportunity to trade. You just have to be nimble and quick when the opportunities arise. Thank you.